Hello and welcome everyone to the week ahead commodity reports, where we of course will be reviewing the markets for the week ahead. It's now official. Google searches for the phrase how to trade gold. They're now at the highest levels on record ever. Now this comes as no surprise, considering almost 70% of people, they're increasingly concerned about the safety of their money in the bank, as financial institutions around the world, they struggle to service their debts due to rapidly rising interest rates and liquidity challenges in the banking sector. It seems incredible to think that just over a year ago, interest rates were still near zero. Now, 13 months later, and after 10 consecutive hikes, the Federal Reserve, they've now increased interest rates to 5.25%. That's the highest since 2007. In a similar way, the Bank of England, they have now hiked interest rates 11 times to 4.25%. This represents the most aggressive and fastest interest rate hike campaign ever seen. Throughout history, every time central banks have engaged in interest rate hiking cycles, they have kept going until something eventually breaks. That's the exact same situation they find themselves in once again now. 2023, that will be remembered for many things, but one of the most notable will be the biggest bank failures in history since the global financial crisis of 2008. The Fed's 10th consecutive interest rate hike that sent shockwaves through the financial system, triggering a significant sell-off on the broader banking sector. Back when interest rates when they were near zero, global banks, they scooped up record amounts of bonds, but as traders know, when interest rates go up, bond values they go down, and that's one of the major reasons why a whole bunch of banks right now, they find themselves in deep trouble. The Fed's rate increases, that has meant that bonds held by banks, they have fallen in value, and they're now trading significantly below what the banks paid for them. Currently, the value of unrealized losses in the portfolios of some of the most widely recognized global banks, it's estimated to be around 1.84 trillion, and that number is growing every day. Last week, First Republic Bank, they joined a long list of the biggest banking failures in history by becoming the second largest US bank to collapse after Washington Mutual, which failed during the global financial crisis of 2008. So far, the Fed's aggressive interest rate hiking campaign, that has resulted in the second, third, and fourth largest banking failures in US history, which have all occurred in the past 2 months. Economists, they're convinced that this is just the tip of the iceberg, and this turmoil is far from over. One of the biggest beneficiaries of the current financial climate has unquestionably been the precious metals. Last week, gold prices, they hit an all-time high of 2,082 US dollars an ounce, breaking above its previous record of 2,075, reached in August of 2020. Since the final quarter of 2022, gold prices, they've been on a parabolic run, taking their gains to over 32% for the November lows of 1,600 US dollars per ounce. And the rally, it might not stop there. Elsewhere in the markets, the looming risks of US debt default, that's now emerging as the next money-making opportunity that traders will not want to miss out on. The US is in $31.4 trillion in debt. That staggering amount is in the spotlight because the US government has hit its borrowing limit and will not be able to pay its bills if Congress cannot agree to raise the debt ceiling by June the 1st. Interestingly, the US has been in this situation before, and if history is anything to go by, the stage is almost certainly set for precious metals to skyrocket and reach new all-time highs. Back in 2011, the USA, they hit their debt ceiling on the 16th of May, and after a long-standing political standoff, they passed legislation to raise the limit on the 1st of August. It was during this exact period when gold prices, they previously reached all-time record highs, while silver prices, they rocketed to $50 an ounce. A similar scenario is playing out right now, which could easily slingshot gold prices to $3,000 per ounce in the future. When you consider the full magnitude of events that are currently unfolding, from a global banking crisis, US debt default, recession risks, to potential Fed interest rate pauses or cuts, then it's definitely not impossible to see why the current macroeconomic backdrop for precious metals, that's looking even more bullish than ever before. And it's not just the precious metals that are attracting attention right now. Unprecedented demand for safety, diversification, and high returns, that has positioned agriculture as one of the hottest asset classes of 2023, which, as we know, is recession-proof and also crisis-proof. Cocoa, coffee, their prices, they're currently trading at the highest levels on record. Meanwhile, sugar prices, they surged their highest since 2011. They're currently up over 450% from the 2020 lows. So far, within the first 5 months of 2023, a total of 27 commodities ranging from the metals to the energies to soft commodities. They have tallied up astronomical double to triple digit gains, and this is just the beginning. Right now, we're seeing commodities notching up spectacular double digit gains of 10% or higher in a single week, sometimes in a single day. And just think about that for a second. In today's inflation adjusted terms, your money sat in the bank that will not even earn that return in a year or even 5 years from now. That's why it's no surprise that banks around the world, they're struggling to retain deposits, and logically it makes no sense why anyone will want to leave their hard-earned money sat in the bank on a 0% interest rate while simultaneously allowing inflation to devalue their purchasing power when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. Right now we have crisis on top of crisis, which, as traders know, that translates to opportunity on top of opportunity. This is the time that traders, they wait decades for, because it's times like these that make millionaires and billionaires out of regular people. There's a lot of traders out there that completely missed out on two of the previous greatest wealth transfers in history, including the global financial crisis of 2008 and more recently the pandemic in 2020. The ones that saw the opportunity and knew how to capitalize, they accumulated life-changing wealth. But once again, we find ourselves at the forefront of one of the biggest wealth creation opportunities of all time, and that explosive cocktail of events that is currently unfolding, that now presents the third greatest wealth transfer of our lifetime. More millionaires and billionaires, they will be made this time round than ever before. The only question is, will you be one of them? Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we've been transparently documenting through our weekly videos. If you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures, and we're only in May. Historically, each time commodities have started the year on a positive note, they have always gone on to finish the year outperforming every other asset class out there. These past few months, they're just a taster of what is yet to come. If you want to take advantage of these extraordinary markets right now and huge money-making potential on offer, there's no better time than right now. Go to jointhegoldensilverclub.com to learn how our mentorship program can take your trading to the next level. Time is, of course, the most valuable commodity that we have. Make sure that you don't waste it. So with that, let's move over to the charts and we'll talk you through exactly what we look at here as we head into next week. So firstly, we absolutely have to start off with crude oil. We were banging the drum with you last week that this was a huge buy opportunity. Our expectation was crude oil would come all the way back down and retest the price swing lows that were tested on the 20th of March. All of that played out. As you would anticipate, we're built into multiple positions with our clients at the Gold and Silver Club, and we've seen a lovely move here over Wednesday, Thursday, and Friday. Essentially, you've seen over a 828-point move to the upside here, just within the matter of 3 days there. The low was put in after the Wednesday's FOMC statement, providing you with a fantastic opportunity to grab lower prices right at the prior swing lows when we had the breakdown towards $63 per barrel. We're now trading already back above $71 per barrel. I talked you through this whole setup previously, that essentially hedge funds, money managers, the funds, they all ended up buying much later into the move, only really positioned themselves long after OPEC did an emergency output cut. That was when 91% of hedge funds, they went long at the 3-month highs here, and they've not been able to withstand at all a 1,950 point move against them. They've essentially been liquidated on this breakdown that we saw at the beginning of last week, and we've taken that as a fantastic opportunity to sniper in and build out multiple positions here. That's, of course, after we also banked a windfall amount of profit, 13% banked at the start of the month, the start of the April here, and this has given us a fantastic opportunity to rinse and repeat the cycle and do exactly the same. We're banked at the highs. Basically, the hedge funds, money managers, they've been our exit liquidity here. We're banked as they've been buying, and instead now we've been reloading and buying as they've been getting stopped out, essentially. So this is played out really nicely with everything else that we've been talking you through to expect for oil here. So again, same on Brent, we've been expecting a retest back down towards the swing lows, massive buy opportunity from those levels there. So you'll see again from low to high, we've rallied just under 500 points in 2 days over Thursday and Friday. Everything that we talked you through to expect here, massive buy opportunity to be had on the energies here. Alongside that, we identified with you on Thursday's report a great opportunity too here on copper. That our expectation was that copper, we would get a bid on Friday, and particularly in the lead up to the public holiday that you've got on Monday for the King's coronation, that typically copper can really outperform on these public holidays where the LBMA is closed. There'll be no London fix in the morning or the afternoon, and typically this can be some of the best opportunities where you do get breakouts here on the metals. So we're looking out for that as well as we go into the early part of next week. Now, as we discussed with you previously, we have been selling short platinum. In fact, we took the opportunity last week to bank 500 points on this trade. That worked out really well. You can see the breakdown in price action that we've had on platinum from $1,150 per ounce to the lows here that were tested on Friday of $1,043 US dollars per ounce. We have seen a lovely correction to the downside, which we've been benefiting from with this market. And then as well, gold and silver, as we discussed with you previously, we were expecting outflows after the European Central Bank announcement, after Friday's non-farm payrolls. That pressure to the downside, very much like we've seen on oil. So the sell in May, go away narrative has definitely played out on this market by such a severe breakdown, but giving you a massive opportunity to buy in lower. Now I'd look out for similar, really on the other metals there, gold and silver. What you want to be looking at, in our opinion, at the moment would be opportunities to be buying in at lower prices. We've definitely seen that normal sell-off that you do get after the FOMC, the European Central Bank, the non-farm payroll data as well. Again, it's very typical to get exaggerated moves when you do have the LBMA close. So for the metals, I'd absolutely be watching out for that on Monday. Obviously, at the moment, I'm looking out for the bigger move here to occur on copper. So that's definitely going to be on the radar here. And again, we've really been gifted with some massive opportunities here on energies, ability to sniper in on this breakdown all the way towards the swing lows and then build those positions out, which are looking really strong here into Friday's close. We're basically broken out just under 4%. What I would be looking out for would be the potential to again get a further drive higher, a 3-day impulse move as we go into the early part of next week. So I'm very keen to see if we'll get a further breakout. If that's the case, we'll simply continue to bank into strength and take some of those profits off the table. As you know, whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to really give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success is not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you just end up wasting lots of time, money, and effort, and you have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis, outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, then the odds are already stacked up massively against you. If you want to change your results, then you definitely have to change your thinking. If you want to learn our exclusive, research-driven approach that is never taught to retail traders, only reserved for professional traders in banks, hedge funds, with access to powerful game-changing insights, including where the banks and hedge funds they're buying and selling in real time, the key liquidity zones, so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, quarterly, real-time data-driven cycles, the intermarket correlations, and the sentiment in the market, then you need to join our mentorship program. As we head into May, we are in one of the greatest eras of wealth creation the world has ever seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than right now. If you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.